Global financial markets are trading in the red due to the escalating crisis between Ukraine and Russia. Evidently, the news that the Kremlin recognized the independence of the Donetsk and Lugansk regions and deployed troops to East Ukraine dealt a painful blow to financial markets. Yesterday, American trading floors were closed on the occasion of President's Day. And now let's discuss what is going on in the US markets today. Today, futures on the S&P500 are trading 1.5% down. This gloomy start of the week bodes ill. The news from East Ukraine could worsen the overall downtrend in the US stock market. What about geopolitics? The US and its European allies condemned the recognition of the two rebel-held areas of East Ukraine by Moscow. At the same time, they said that they would not slap tough sanctions against Russia unless Russia invades Ukraine beyond these self-proclaimed republics. Has the crisis been defused? Understanding this simple fact could give fresh impetus to global equity markets. Perhaps today, besides, investors are speculating on the prospects of monetary tightening by the US Fed. Traders will find out fresh inflation data on Friday. For the time being, investors want to play safe, avoiding risky bets amid frustration. The S&P 500 slipped to 4,366, drift lower. The index is expected to stick to the lower border of the corridor between 4,320 and 4,370 points. While the US stock market is trading in the red, the US dollar is gaining ground for the same reasons, such as dramatic news from East Europe and the looming rate hike. At the moment when the tensions around Ukraine reached the boiling point, the US dollar asserted strength. Now its index is trading at nearly 96.02. The euro is trading at 1.1353 against the greenback. The US dollar index that measures the greenback's strength against a basket of 6 rivals, including the euro and the Canadian dollar, has appreciated 1%. It's able to advance again ahead of the policy meeting of the Fed Reserve that is scheduled for March 15 and 16. The regulator is widely expected to raise the official funds rate by 50 basis points at a time, and some cautious analysts predict a rate hike by 25 basis points. The US dollar is set to strengthen with any scenario. Currently, the index stalled its growth, consolidating in the corridor between 95.80 and 96.40. Today, the USD CAD pair remains in the same range between 1.2600 and 1.2800. The loonie is less sensitive to the news on Ukraine. Probably the reason is that Canadian markets were closed yesterday because of the national holiday Family Day. Besides, the police cleared out the Freedom Convoy truckers who had occupied the nation's capital city, Ottawa. The USD CAD pair consolidated yesterday before it declined today, and now the currency pair is trading lower at 1.2727. Nevertheless, the trading instrument is firmly stuck inside a trading range. The price will hardly break the upper border because high oil prices are pushing the pair down, so the price is likely to face strong resistance. Bitcoin plummeted in parallel with the stock market amid hostilities at the Ukrainian border. Today, the digital token fell below a 2-month low, trading at $37,923. All in all, the digital gold has not been able to become a truly safe haven asset, giving in to real gold. Meanwhile, investors are flocking to gold and the US dollar amid market turbulence. Thus, Bitcoin is losing ground. Analysts warn about the pessimistic level of $30,000 ahead. Now Nowadays, geopolitics serves as a market catalyst, while high inflation is taking a back seat. In this context, analysts do not rule out Bitcoin's crash to historic lows. Notably, the dynamic in the crypto market is getting more correlated to the one in the stock market. The flagship crypto is expected to trade in the corridor between $36,488 and $36,739 today. By and large, financial markets have been wound down by geopolitics, so the US stock market is likely to close with a 1% painful fall. Analysts project the hostilities in the east to Ukraine to come down sooner or later. When it happens, the US stock market will perk up. Thanks for watching this video. We are open for any discussions. Leave your comments and ask our experts any questions. See you tomorrow.